Leif Eskesen, Chief Economist with HSBC Asia Singapore, joins us with his India take and with his global take. Leif, before I get into India-specific questions, what do you think that QE tapering can easily be delayed to first quarter or to the second quarter of FY for 2014?
Well, I think now with, should we say, a couple of things. Number one, the fiscal issues are going to be with us for a while still, as we discussed earlier. I mean, now we have potentially another showdown as we head into December or January on the fiscal side. So I think that potentially could push Fed tapering a bit further back to the early parts of 2014. Seems quite likely at the moment. In addition to that, I mean, I think the economic data we've had out, of course, the more recent non-farm payroll data we have also suggests that on the domestic side of things now, in the very near-term things, also maybe a bit on the soft side, that also argues in favor of maybe Fed tapering not starting until the early parts of next year. Whether it's going to be pushed back to the second quarter, I'm not too sure of. I would still suspect that the first quarter is the more likely time for it to begin.
Leif, hi, morning. Besides the recent inflows, which Asian economies will see sustained capital inflows over the next 3 to 6 months, according to you, and what about India in particular?
Well, I think obviously with the pushback in terms of Fed tapering, that has provided, a sense of relief for the global economy, global financial markets, for emerging markets, and we have seen reflow back into emerging markets in terms of capital. I would suspect, that most emerging Asian economy will continue to see some inflow in terms of capital over this period of time. In India's case as well, we've also seen it already. But I think in some sense we will not necessarily see a very dramatic reflow back in, because Fed tapering has not been, in a sense, given up. I mean, it's just been delayed. So I think that will, in some sense, still present some headwinds for capital inflows. They will be somewhat supported in the near term, but I think there will be some caution on that side still.
So, Leif, in what range do you think rupee will move? Because surely after the steps taken by Reserve Bank of India, rupee has managed to bounce back very smartly from levels of 69 to 61.
Well, I think in some sense right now, I mean, you've had that external factors have moved in the right direction. So, of course, the pushback at the Fed tapering has provided some relief to the currency. That's why we've seen it sort of rally to the low 60s that we have right now. You have started to see the effects of the steps that the government has taken to sort of curb imports, bring in more capital, including non-resident deposits. That's also something that's provided some relief, I think, for the currency at the moment. I would suspect in the near term, I mean, it will probably remain, I would say, relatively stable. I think as long as should we say the external conditions don't change materially, I think as long as the government continues on the right track in terms of policy, so keeping fiscal and monetary policy tight, sticking to implementation of structural reforms, that would also provide, should we say, some stability to the currency in the short term, and in a sense allow the government and in some sense RBI to sort of roll back some of these currency stabilization measures. As we get closer to Fed tapering, when that actually begins, that to some extent could again add some pressures on the currency. Much depends, I would say, on where the current account is at that point in time, to what extent policies are still on track essentially.
Leif, so given the high inflationary expectations, do you see the RBI hiking the repo rate in the upcoming policy meet?
Yeah, our view is that the RBI will have to continue to tighten monetary policy and therefore raise the repo rate. So we expect a 25 basis point at the upcoming policy meeting is quite likely. At the same time, we would also suspect that the RBI will probably continue with the rollback of the currency stabilization measures, another cut in the MSF rate, this time by maybe 25 basis points. That would help re-establish the spread between the MSF rate and the repo rate at 100 basis points to help, should we say, eventually make the repo rate, the operational monetary policy rate again, we could also see some further liquidity easing measures introduced to help facilitate that.
So is there a case for delaying the repo rate hike to next monetary policy given the sharp economic slowdown, or on the contrary, there is a case for a 50 bips repo rate hike by December 2013?
I think in light of the inflation numbers we recently had out that again moved up, I think in light of the, should we say, signal sent by the RBI that it wants to zero in on inflation, it would be important for RBI in a sense to address the inflation issues at its upcoming meeting and already begin a tightening at that point in time rather than postponing it. I think it's important to sort of, should we say, support its inflation fighting credentials, that they act at the upcoming meeting to sort of cement that the intention is indeed to bring inflation under control, and so I think it makes more, should we say, sense in some ways to act on that as soon as next week.